All right, y'all, welcome back. My name is Steven, and this is episode 21 of our 5-account Take Profit Trader Challenge, trying to take our evaluation accounts to Pro funded accounts and then to Pro Plus funded accounts in a live environment. And we're approximately about $1,000 in profit. I'm not looking at the exact numbers. This video is specific to our trades today. It is August 8th. It's the morning New York session. Right now it's approximately 11 a.m., 9 a.m. my time, Mountain Standard Time. And we took 2 trades this morning. Actually, we took multiple, but it was really one trade where I entered and exited multiple times. And then we took a second trade. So if we look here on the screen, this is my TradingView, and at the bottom, this is our back-tested Edgeful data. This is over the last, since I guess May 10th till today, where we have about 4,600 in back-tested profit with about 750 in drawdown over 30 trades, 83% profitable. It is profitable farther back. These are just 3-month stats. I ran it back to 6 months with a pretty good profit ratio. So we took it. We also took it yesterday, which is in another video. If you scroll back on the playlist, if you want to look at that, and it was a loser. But we took it because that's what our plan called for. And we took a long once it got triggered. So our algo triggered us, gave us a signal. We manually enter at this point right here. 22,627-ish, and the idea is to take it up to this green line, which was 22,655-ish. Is that what that is? 22,655-ish. I think that's the target. Yep. So we entered, price went up, it retraced a little bit, we got out, it wicked back up, we got back in, took it a little bit higher, and we got out slightly prior to our profit target, our original profit target. So we did have a little PTSD from yesterday, and just we still need to work through that. So still a little bit of emotions playing in, even though these reports do a really good job of taking out the emotion. It's Friday. I didn't want to go into the negative today. I don't know why, but I just could not keep my hand off the button. So not managed in the best way, but we managed to take profit, leaving a little bit on the table. So that was our morning trade. Looking into our second morning trade was an initial balance breakout. There's a few lines on the table here, so it might be a little bit confusing. Now, I didn't use an algo or anything for this. What basically I used the Edgeful reports. Well, we'll kind of go over and I'll show you how I established this. So really what we're looking for is this. This is our trade. Essentially, we entered, and I think we entered a little early because we didn't wait for this retracement. That is a high probability retracement after breaking this initial balance. So just to back up for a second, we established the initial balance lower range. We just moved all the way up and broke it with a candle close and then retraced. And I believe I entered right around here. And once we came back into it, I just kind of took it as opposed to waiting for this retracement. So this first line I marked from a report, which we'll kind of go over, and these other gray lines down here are more of a probability of a retracement too. But this second gray line to the bottom here, and I'm not going to put the prices, but this is where it's unlikely to retrace back to. So technically our stop is back here at 22, what is that, 22,589-ish. So if I go back into my quant tower, you'll see that I'm in a trade, and we're a little behind now because we retrace back to this level below the green line, which is our entry. And you see we have our stop set up, and we also have our take profit target. So this is 25,579. And let's make sure our target is right in TradingView. It's 23,589. So we'll go back in and just adjust that to make sure we don't have any errors. So this goes up to 89. Right around there. It's 88, close enough. So we have at least a 1-to-1 profit or R ratio. The thing is, though, I will have to leave at some point in the day, so I may not make it all the way to our profit target, which is in the case, I'll just close the trade out wherever it is, either in profit or loss between these boundaries. So that's the idea. Let's go ahead and look at our account for the day. Our balance is sitting at 51,023. You can see the trades that we did take. We profited it on that opening range break, 48, 25, 7, and 15, which is about $100. Well, we could have just stayed in it the entire time and we would have been better off. We left a little money on the table. But that was our morning trade, and we are currently in a position for just 2 contracts, and we are $86 in drawdown at the moment. But it looks like we did get a retracement, and price may be moving back upward towards our target. We don't know, but we'll let it play out. So coming back into TradingView, I'm going to bring you actually into the Edgeful reports next. So we'll add those up. Let me bring my screen up. And I'll walk you through the initial balance breakout report. So we'll start with just the initial balance breakout by weekday. So on Fridays, price breaks the initial balance. It's a single break 70% of the time. And that's using a wick with a candle close. It's 87% of the time. It's a single break. So we don't expect price to break back down underneath the initial balance low. And that's 21 out of 24 days. So that's pretty strong. Then the next thing we're going to look at is rejection by rejection. And what this looks at is when the IB high is formed first. For instance, the first break of the IB high is a certain percentage. In this case, the first break of the low happens 81%. And this is on Fridays by wick. You could change it by candle. I usually do both of them. And if we look on the other side, when the IB low is formed first, 69% of the time the IB break of the high is first. Well, it did happen. We did get the IB break of the high and the low form first. So that gives us some confirmation that that's what generally happens from a probability standpoint. Then if we go to IB by levels, what we can look at is how far, and I have it set up as a breakout. So when it breaks out of that 60-minute range, how far does it extend outside of that range? And in this case, 77% of the time it extends to 0.5, 88% 0.2, and 100% to 0.1. So I'll come back to that and I'll show you how that works. You can set all that up. You can customize the levels. You can tweak it, do it by weekday or by all times, by wick or by candle close, which will change the stats a little bit. I like to kind of do both and take an average of them, kind of play that into or put that into perspective and factor that in just slightly. And the last one we're going to look at is by retracement. And this is basically when it does break out of the initial balance, how far does it retrace back into the initial balance before leaving it again, or before not going any lower. That's how I understand it. And we're doing this for Fridays. And so we're looking at the breakout. 58% of the time it retraces to 20%. However, if I change this to, just to show you how we can really fine tune this, if I change this to 17%, it retraces back 75% of the time. So 17% of into the initial balance range. So that's the retracement level. Now we'll come back to TradingView and we'll see how we can use the Edgeful indicator. So we have this Edgeful initial balance breakout indicator where we can set these levels like 17, 50, and 60. We can set the time. We can set the extension, which I said a high percentage time we're going to go up to 0.5. And we could even set levels. And for some reason, these are not showing up on my screen today. So I'm not sure why those levels aren't working for me. But we have everything that we need. So our target is basically this 0.5 extension. We know we still have a high probability getting to 0.2. And, 0.25 would be about half of this extension. So we know that we have a high likelihood coming back up. Now here's the 17%. So it looks like we did retrace to about 20%, right? So let's just take this and just change the level to 0.20. I think that was 58% of the time. So when we change that to 20, you can see that it moves the line down, and we did retrace back to that 20 level. And now we are consolidating probably to move higher to the upside. And if we get below this second retrace or third retracement level right here at 62 or 23.588, I'm going to be out of the trade. So I have it set a little tighter because honestly, I don't know if I want to take on any more risk. So I could exit the trade at this level right here, which is 23,621, just to preserve capital and close the week out. But the most probable thing is, in this case, based on all of the reports that we ran, price is not going to retrace back to that third gray line very often. One last time, coming back into Edgeful. You can see how I use these back and forth. It's going to only retrace to 60%, 33% of the time, 1/3. So what about 65%? One-third. So you could see, well, it could still, what about 70%? One-third. All right, so it's likely if it retraces past that 17 or 50%, maybe it's likely going to go all the way to 75, right? We'll see here. Let's look at 75%. Oh, that's 1/3. Let's look at 80%. So we're strictly playing the probabilities here, right? It's like 2 to 1 chance of it. Still, 1/3 of the time? What about to 90%? So you can kind of see how that works. Really cool tools. 25% of the time. And lastly, what about to 99%? 8% of the time. So you could adjust your threshold for risk using these customized reports. A really cool tool. I'm going to go ahead and pause the video for the moment. It looks like we are likely, hopefully, moving back up after our retracement, and we will not retrace all the way back. Let's just take a quick look at Bookmap as well. Looks like we have a lot more room to the upside. Not a lot of, I guess we do have CVD is positive for the session. It's flattened out a little bit, as you can see. But we have some orders to grab up here. And not a lot of limit orders to the downside. So price maybe will consolidate here for a while until the order book fills up, and hopefully we continue to get that move up. And if not, we will take our licks and wait for the next trade. So until we get some more data here, I'm just going to hit pause and go have some breakfast. All right, we're back with a little bit of an update. So we are seeing a little bit of a pullback. CVD for the session from the open is still positive 9,000, but we can see that it's a little flat right now and has been moving down significantly since about 11:30 Eastern, which a few minutes. So we did have a nice small push to the downside. If we go back to Edgeful, it kind of helps you keep your emotions in check. If we look at the retracement on the initial balance breakout, we're going to retrace to 50% at least, or 50% of the time. So it is likely that we retrace all the way back down. However, like we said, let's change that to 55%. It's fun to change the numbers. That's going to be 50% of the time as well. All right, so you can start to see and expect certain things to happen on a probability basis. And that could maybe help you deal with some of your anxiety or mental stress. So 60% is only 33% of the time. So a third of the time it's going to get there, and we know that it's going to get there to 75% of the time, a third of the time too. So if you have the appetite to and the time to take on that much risk, you can make that decision. And at least you have data to help you make that decision instead of guessing. So we know still 33% of the time. That was all the way up to, I believe, 90%, right? I think we actually ran that a few minutes ago. %25 at 90. So 1 out of 4 times it's going to get there. Is today one of those days? Do I want to take on that much risk? Probably not. So kind of feel like if it gets to, another way to look at it, if it gets to 50%, or if it gets to 60%, it's likely going to get to 80%. So I'm going to keep my stop at 50%, or excuse me, 60%. All right. So just a couple different ways to look at it. You could even go to 61 and see how that changes it. You could do a percentage by percentage. 61 is 33%. Same as 60. So once we hit that 60 threshold, it could likely go all the way down to 80 or whatever. So that's kind of how I'm using this data to help take the emotions out, but you still have to take on risk. And I think as long as the percentages work out well for you, over time, if you stick with that process, you're likely going to have good results, because the math, notwithstanding special circumstances, usually maths properly. So we will continue to monitor and see how it goes. Looks like we have a nice wall of limit buy orders resting. That's thickening up, where hopefully we start to get some aggressive buyers stepping in as well to push the price up. Not a lot of selling. Order book has more sellers, but a lot of the orders up at like 23,700. There's a 200 lot, and down below it's a lot more buy orders. Looks like some of them just got pulled. Maybe they're going to start to move them up, and maybe price starts to make its way back up. Looks like all the selling pressure got absorbed by these limit orders, and some aggressive buyers step back in. Price in the short term looks to be moving back up. Coming back to TradingView. Let me make that full screen. We almost retraced to the 50% level. Which is going to happen half of the time, which is fairly high. And currently we are in $260 in drawdown on 2 micro contracts. You can see where our stop is. Now, one thing I don't like about this stop, I'm going to be honest here, is that we have, well, I really kind of want to move it down a little bit, because we have this bullish fair value gap, right? So then we look at the data, and it's like, okay, it's going to retrace this far, right? And then you add in more pieces of information. Well, it looks like it bounced off the top of that fair value gap. Am I comfortable taking on more profit? And how often are these bullish gaps that are created in the same session mitigated? So do I move the stop below it? I think that's valid, because I feel like this bullish fair value gap is also in line with where price is generally to rebound back to the upside. Now, we could go into, and let's do that. Obviously, now we're going down the rabbit hole. We're going to go into Edgeful. We're going to look at a fair value gap report. For New York session. So New York session, let's change it with a candle close on Fridays, 100% mitigation on the 5-minute chart. So during the New York session, bullish fair value gaps, which is the one I just noted on the chart, are mitigated 71% of the time. That's pretty high. So that's kind of what I'm talking about when I say, I don't know if I want my stop inside of that gap. And that's with a candle close. Let's look at it with a wick. 78% of the time. So realistically, the odds are is that that fair value gap I'm going to remove this initial balance so we have a little more. We'll add fair value gaps in here so you can see them. It's very likely that this gap gets filled. We're also creating some bullish gaps to the top. So you can see here's our bullish fair value gap that was created in the New York session. 71% of the time this is getting mitigated. Up to 78. We also have this swing low anchored VWAP that could likely get tested, which also comes in line with this bullish gap. So anything could happen. But to me, a couple options: get out of the trade now, or just write it out, because there's still a high percentage based off the reports that price does not retrace back to %60. Which is 23, 590-ish, where I would likely put it. I guess it all depends on my risk tolerance and how much of the profits that I made I want to give back. And from an odds and probability standpoint, with the single break, we could just range, right? Also, we may not break the lower edge. There's nothing that says that we're going to break through the top again. The reports do not cover that. But considering it's a Friday, we had such a strong move, it's fairly safe to expect a pullback. So we could start to paralysis by analysis it, where I think right now we just stick to our gun. We could also exit and re-enter and catch the move back up to the top. Don't really want to do that. We're going to try to keep the emotions out. I think the best play is to put our stop below the gap, accept the consequences, and Just go with it. Coming back to Bookmap, it looks like some aggressive buying is stepping in, providing a little comfort for the short term. CVD is increasing, and we'll pause with an update. All right, so a little bit of an update. We are back to a break-even point. Doesn't mean we're free and clear here. I do have to go to an appointment in about 15 minutes, but one of my other appointments got canceled. So my thought is either to close this trade out or to just set my stop. And just let it play out and then come back and see where we're at. But we're going to give it a few more minutes to play out to see what's actually happening. Looking at Bookmap. Still kind of in limbo here. After having an aggressive push up, a little bit of a retracement, but price is moving in the right direction. CVD is increasing a little bit, but flattened over the last couple minutes, last 5-10 minutes. Still a lot of orders to grab to the upside. There's a 250 lot hanging out here at 23,700. And we're kind of above the or at the top end of the volume profile for this session. So that's the update. Go ahead and pause it, and when we have an update, we will continue. All right, so here's what we decided to do. I think we're gonna just hold on to the trade. We're gonna let it play out, and we move the stop up behind this previous swing low. We may come back to get this bullish fair value gap. If that's the case, we're probably going to mitigate it and continue to go down. It's going to be difficult to get back to the top of what our target is. And we're going to kind of minimize our risk by keeping it right there. So we do have to leave for about an hour and a half. We're going to let this play out. I moved the stop to 21.7. I think it's 75 is where we want it. And that's because let me go into TradingView. That's because that's the next area where I think we could run into resistance. I guess not 21.775. Excuse me, 21. Is it 750? What am I doing here? This is so crazy. Let's find this zone again. No, it is 23,750. Right here. The high of the previous New York session. So that's where we moved the target to. which is about 20%. Likely we get there if it continues to move up. So that's the plan. So we'll be back and we'll see how it plays out. All right, so we're back from our appointment. We're still in this trade. It is like 1:50 p.m. Looks like we're in the positive. Indications that we're going to continue to move up, but there's no guarantees. Definitely buyers are in control though. You can see we pushed up, had a little bit of a halt, then continued up. Slight pause, continued up, pulled back, continued up, consolidated, pulled back, consolidated some more, and more buying pressure to the upside. So we're just going to hang out, and I like our chances of continuing to the upside. As much as I like to really mentally, I'll tell you what I feel. I feel like I should just close the trade out because I'm up for the day, and to close the week with a positive momentum would be the thing that I mentally want to do. But looking at the data, the price action, my analysis, and the fact that I decided to get in here, I think I need to stick with the plan. That being said, at this point, I would be okay moving my stop up to minimize downside risk to behind this resistance. Let's look at Bookmap. I haven't taken a look there yet since returning. Still have positive delta on the day, so there's more aggressive buying going on. A little flat over the last few minutes, last 5, 7, 10 minutes, but overall we're continuing to make higher lows and higher highs. We have lots of orders to the top side that limit passive orders that these aggressive buyers are likely to push through. We've built some volume up here in the range that we're at in this session. And yeah, I'm looking for some more movement to the upside. And obviously our targets around this 23,750, but we're going to need to break through this sell wall here in order to achieve that. So I think a good stop level might be behind this wall, which looks like it's starting to move up, right? With sellers failed to absorb through the wall completely. Same thing here. We just stayed above this wall, keeps shifting and sliding forward. Now it's pretty much holding, and we're still getting aggressive buyers, and we're starting to challenge and slowly break through this wall to the upside, slowly, just chipping away at it. So I like what I see from a order flow and price action standpoint. We are at the top of that volume profile, so we to break out to the downside. There's just a pretty thick wall where there are no gaps or imbalances on the way down. So it's going to be hard to push the price lower just looking at what I see. Obviously, volume is pretty low right now. If we're factoring in volume, it is the afternoon. But if we look across the board, we have a lot more larger green candles, many more larger green candles than we do red candles. So if we look up at the volume in the order book, well, there's 200 orders up here at 23,720. There's 159 orders up at 23,750. Over 100 orders at 23,740. It really looks like we're going to continue upward. So I'll pause and we'll see if we can break through this wall. It looks like we're starting to break through that wall, or orders are being removed, one of the two, and price is continuing where it looks like we're approaching that 23,700 area where we rejected from before after absorbing this sell wall, or maybe some orders were removed and it moved up a little bit higher. Aggressive buyers still stepping in. I would contemplate getting out at 719 or 719.75, or right in front of this large red sell wall. Obviously we're on M and Q. I don't have NQ loaded up, but I would assume that NQ probably has even more contracts sitting up here. But we still are getting aggressive buying, and the CVD in aggressive buying is increasing, and we are moving up. So that's a good sign. There will be a point where I move my stop up a little bit farther, even maybe even to break even, just to take a free shot, and regardless of the outcome, be happy with, at minimum, finishing the week off with a positive result with 1 week to go in the first month of our 5-account challenge. Be back shortly. That wall is starting to disappear. Looks like some orders were removed. Or the wall's moving up a little bit, or did we completely absorb it? Maybe a little bit of both. Sellers are trying to push it back down. So that 700 is becoming resistance. Before it was support, or it's becoming support prior to being resistance. And it looks like we're moving. We'll stay live here while price is pumping to the upside. Looks like we're really popping. So we're coming up to this wall at 720. What I think I'm going to do is take one contract off here at 720, move it into break even, and let the second contract run. See if we can break through this wall. Because if we can break through this wall, man, it's going, right? Other options, if I see a really strong rejection off of this wall at 720, we could just close it out. Or we could just take our chances and let it run all the way up to 775. See all of the things that mentally come into play, right? It's like the fear of we're in a good position, we're in a good trade, yet my mind still wants me to exit the trade for fear of losing any gains that we've made so far while sitting in this trade. It's a really difficult thing to work through, to be honest. I think it's the hardest thing for me is letting go of winners too fast and holding on to losers too long, which is why most people fail. So it's taking a lot of discipline to just not push buttons right now. And that's just being transparent, right? Even though things look good, it's almost like we got to go for that shot, right? We miss 100% of the shots we don't take. Looks like we are pushing towards that wall with some strong momentum. There's really no reason for me to get out of this trade right now other than fear of it turning around on me. So the wall is gone. And there's more orders to grab higher. So I think we're in a safe area to, I guess the lesser of two evils is just to move it in to profit. Because even with a pullback here, we're likely just to pull back to this area right here. And now there's nothing to worry about because at worst case, it's a break-even trade. Although I don't think it's coming back because the order book looks pretty. Obviously, you can't see what I just did on Quant Tower, so I'll show you. Basically, move the trade into break even. And we're just going to let it run to our target. Yeah, fear of loss is a really crazy thing in both of those situations I talked about, holding on to those winners or getting out of those winners too fast and holding on to those losers too long. So we'll go ahead and pause the video, and when we either hit our stop loss or we hit our take profit. All right, y'all. So a little bit of an update. As you can see, I have Quantower open. I've put my stop in break even, and we have a little bit of retracement from this 725 level with a retest this resistance right here, these wicks. If we get stopped out, I wouldn't be opposed to re-entering. But my anticipation is that buyers are going to essentially protect this area, continue to push the price up. My instinct was to take profit, but I'm fighting my instinct. And the only thing I did to calm my nerves was to move my stop in to take profit, just in case for some reason it rips back down, which it could very likely do. And at worst case, I exit with a profitable day and a profitable week, and maybe learn a thing or two from it. So I do have a time crunch. So we have about an hour that we can actually sit in this trade before I have to go work on some clients. And that means no matter where we're at within the next hour, I will be closing the trade out before leaving. So letting it run, and mainly because I won't be able to monitor, and I don't trade remotely anymore because it just gets me in trouble when I'm on my web browser. Thirdly is that these orders don't close out, and I don't want to blow the challenge because the orders don't close out. Otherwise, I would just have them set. My concern is that I will still have open orders at the end of the day, which I think is a violation of the violation of the take profit trader rules. So I want to make sure that doesn't happen. So I'll give you guys an update. Right now, it looks like we're pulling back, retesting this area that may have been resistance, and hopefully we're turning it into support. And yeah, worst case scenario, we get stopped out, and there'll always be another trade, right? But we managed our risk, put it in a place where it appears to be fairly safe from coming back to. We have some resistance protecting it. We shall see. I'll be back with an update. So I did end up getting stopped out here in profit. So the conundrum now is, do we re-enter, or did we miss our opportunity because we get less of a good entry? Right, we need to demand good entry. So if I can get a lower entry, but it looks like, yeah, we missed our opportunity. Maybe we put our stop a little bit too tight. So that's how it goes, right? We decided that we didn't want to take the risk on, and we got stopped out in profit. So right now we're going to close this video out. It is possible that I get into another trade. I don't have a lot of time. I have like an hour and an hour max to get involved. But let's just take a look at how the how we finished up. So we're at a balance of $51,092. We're up $155 on the day. So it's a good day. We could have taken profit up here and yeah, been done with it, but we decided to push for our higher profit target and we ended up getting stopped out. So it looks like we did get a strong reversal wick here, but we'll see. I'm not opposed to getting back in, but I would like to see price retrace back to maybe take out this small bullish fair value gap. So maybe I would re-enter somewhere around here, for instance, with 2 contracts. Somewhere around there. So we'll see if it comes back and hits us to take up another leg up. If not, we'll call it a week. And our stop loss would essentially be behind this level. And if we really look at this, this is kind of interesting, right? We have this little swing range where price looking for it to retrace to about 50% of that range. So I would even move this down to probably right there, expecting this little area to be mitigated before we move back up, but there's no guarantees. So we'll see if that happens. But if we don't re-enter, that'll be our last trade of the week, and I'll do a weekly recap as well, just going over our account balances regardless of what happens with this trade. So until next time, have a good week. End.